Hey, good morning, everybody. Welcome to another day of the Market Report brought to you by Mike Bjork. Today is Friday, November 8th. Hope you guys have great upcoming plans here. It's been really nice here in Southern California. We got a lot of important economic news releases to go over today, so we're going to jump right into it. We got the one we've been waiting for this week is the non-farm payrolls brought to you by the Bureau of Labor Statistics for the month of October. We had 163,000 new jobs created back in September. There was actually some revisions for September and August, which were revised higher, so good news there. And the forecast for the month of October was actually 100,000, probably because they were kind of expecting with the government shutdown that a lot of things were kind of stalled, including job creation. But it came in at a whopping 204,000, double what the expectations were. So fantastic news right there, great data that's coming out right now. And then we got the unemployment rate for the month of October. So we had a 7.2 for the last reading percent, and it was supposed to kind of increase to 7.4. It did increase, but not quite to where the forecast is at 7.3. So the unemployment rate did creep up a little bit. Now there's a lot of speculation going on with these job numbers. They're kind of looking into them. So they're obviously a lot of investors are concerned that perhaps maybe there might be maybe they get revised lower or maybe get some revisions, but they're also kind of looking at that a lot of these new jobs that are created are part-time work, so may take it with a grain of salt as well. We also got the personal income for the month of September, which we had the previous reporting in August was at 0.4% increase, so people are getting paid more. Forecast was still an increase of 0.3%. But it jumped up even further. So people got paid a lot more, which we all obviously like. And then on the other side of that, we got the personal spending for the month of September. So we had a 0.3% growth in August, and the forecast was continue about the same type of spending in 0.3, and it actually dropped. So people are making more money, but spending less in September. So let's go ahead and take a look at the core PCE. So you would strip out food and energy, and this will give you the core. And PCE is the personal consumption expenditure. This is the Fed's favorite gauge for inflation. So it's at a 0.2% inflation for the month of August, and for September the forecast is at 0.1%, and it came in at forecast. So right now our inflation is showing very low levels, which obviously is a bit of a concern to the Fed, as we've been seeing that these levels aren't really changing a whole lot, and especially with all the stimulus that we're getting, that the inflation is still so low right now. Last but not least, we got the University of Michigan consumer sentiment. This is how consumers are feeling about where things are going. So we had a 73.2 on this environment back in October. Forecast for November was supposed to go up to 75, and it actually went downwards to 72. So this is a bit of a concern to watch. It's an important, pretty much all these are very important data, so it's a pretty impactful day. So with all this in mind, we're going to take a look here and see how the stock market's playing out. Stock market's up. The Dow was actually almost touching 100. It was at 99 as we're videotaping this. And one of the things that it could be up a little bit higher, but that consumer sentiment actually is kind of tapering it a little bit. Some of the things that's going through the minds of these people is sometimes the good news is maybe bad news, and the investors are all kind of stuck in this quandary because they're kind of getting spoiled with the stimulus packages that the government's putting out there, and they're concerned that if the data is too good, then they're going to taper off on the mortgage-backed securities, and as a result, they're kind of feeling that maybe that's bad news for them. They kind of like that support versus, hey, we got good economic news, we should be happy, and we shouldn't be relying on this stimulus packages. So with that in mind, they're kind of in this transition where they're still trying to decide what's good, what's not good for them, I guess, or their investments. Today we got a bunch of Fed members speaking, including Bernanke. One of the people that spoke already so far this morning was Lockhart out of Atlanta. His comments were basically saying that he feels the economy or outlook for the economy is a bit too murky, that they really probably won't have much decisions on tapering probably till 2014 because just too much stuff going on. Where the GDP and the job numbers came in, but is the GDP enough to support the job numbers with the data? So he thinks the outlook is right now still too murky, and concerned that they don't want to make a decision and start tapering, and then and the economy is not strong enough to sustain itself. So it'll be interesting to see where things go. So the December's will probably give us a good look at where things are going. So we'll have to kind of wait until the next Fed meeting before the end of the year and see where their thoughts are, especially when we have the final revision of the GDP coming out, and then we'll obviously get some more jobs numbers by that time as well. All right, folks, let's jump into the bond market and see what's going on with the bond market with interest rates. So the bond market had a huge drop. So as a result, with the good economic data, it dropped a lot further than even what we anticipated. I said about 101.40-ish range, and it dropped all the way down to 197. So we dropped basically 1 point. 100 basis points equals 1 point in pricing. So we had a pretty big jump in the interest rate. So interest rates did jump up quite a bit. This is the biggest jump we've seen probably in about good 4 months. Been at that big of a drop, 100 basis points. So pretty big. And right now we're still kind of going downwards. So as you can see, with this huge opening gap, we're way down here. So pricing worsened basically by 1 point today. All right, folks. Hope you guys have a great weekend, and we'll see you guys on Monday. And thanks for watching.